Hi there, this is Buy Sell Short. This is our December review of plays that didn't exactly work out to plan. This is something I said we would do every month, review the plays that didn't work like we thought they would, to see if we can pick up some tips, some hints, some ideas of what went wrong on the play, what we did right. And, as I've said many, many times in the chat room, the best way to become a really good trader is to learn from your mistakes. Everyone makes mistakes. Everyone has bad trades. The traders that survive the longest in this business are the ones that learn from what didn't go right and apply it to the future trades. So here we have RAME. This was a trading alert we had November 24th. We picked this one up. The buy consideration was a buck 85. Stops were $1.75 on this one. Really, the stock didn't do a whole lot, and looking at it, we had set our stops at the $1.75 area. Actually, we probably would have been better setting stops at $1.70. If we had done that, it still would have been dead money for the entire month, but the 200-day moving average then was probably the better target or better stop on this stock. The reason we jumped into this one, the rule of two, that's our strategy where stocks that look like they're going to break $2, you jump into them with a target of 210 to 220. We got into this one a little early because we saw a lot of stocks that were in the 180s breaking up to the twos, and energy stocks were hot. We were a little premature on this one. As you can see, over the last month since that's called, it's really been trading in a pretty tight trading range. And actually, this one, looking at it right now, we're going to stick on our watch list for the next week or so. And the reason being, we've got a pretty nice setup here. Break at 2 on this one, and we could be looking at our next mover to the 210, 220 area. So, we had tight stops in this. We got stopped out. Didn't quite happen, but, we'll make it back when the trade does trigger. Actually, looking at this one now, I'd probably be looking at setting a buy trigger on this one at $1.95 over the next few days. TRID, this is one, again, we jumped into on November 24th, holiday shortened week. We jumped in on this one on the break at 2 with an eye on 220. Now, the $2 strategy doesn't work as well for stocks that have recently been above 2, which is what TRID was the previous month. So, lesson learned here, the $2 strategy works mostly for stocks on fresh $2 breaks, meaning stocks that haven't traded over $2 for 3+ months. And if they haven't traded over it in many months, even better. But we jumped into TRID, $2, $1.95 and $1.90 were our stops in this one. It ended up just fading throughout December. We're still playing this one as a January popper play and a CES play, Consumer Electronics Show. But again, we played this trade right. It could have gone on a move on that break at $2. It didn't. We stopped out with minimal losses. If you were an aggressive trader, it was a 10-cent loss. As I mentioned, everyone else, 5-cent loss. And we're still looking to play this stock. CYTR. This was a trading alert on the very last day of November. $1.05 was our buy. We were looking for $1.15 to $1.20. If you recall, biotech stocks were starting to heat up, and this was a play on its peer that they own a chunk of shares in RXII. We actually ended up jumping out of this one a little bit early because it really did nothing. And this is one of these things, this is a stock that if it really doesn't pop within a day or two, I'll move on. And the reason being, we've played this stock so many times over the last few years that if you play stocks over and over and over again, you sort of get to know that if they don't move at that exact moment, they're not going to move. Now, looking at the CYTR trade, our stops were at 98 cents. So even though we jumped into this one at $1.05, the stock really did nothing. We got a 5-6 cent gain on it. It didn't trigger stops over the last month while we were in this play. Now, I know traders mention a lot of times that they're in a bunch of stocks and they've got no free cash. And you'll hear me talking about churning your account, looking for stocks to sell out of so that you can keep your money moving. This would be one of those candidates. If I was looking at my portfolio and I needed to free up some cash, I would look at CYTR and I'd go, you know what? This has pretty much been dead money for me the last couple of weeks. I'm going to sell it. I'm going to rebuy it if it breaks the $1.11 area. And if it doesn't, great. I'll use that money for another trade. Now, even though this one didn't trigger stops, I still consider it one that didn't work because it's been 30 days. A rule of thumb is if our plays don't work within 30 days, on to the next bus, or wait for the chart to end up working. And the fact that this stock didn't move when the biotech stocks were crazy over the last 2 weeks, the second or third day in biotech mania there a week or so ago, and if I had CYTR and it didn't move for me, I'd ditch it. So that is the lesson to be learned from that trade. SNN, little small oil company that we jumped into. The buy target on this one was $1.18, and we were looking for $1.25 with $1.15 stops, and we jumped into this one the 1st of December. And really, the chart looked pretty good. We were getting into the bottom of a trading range, and it really did nothing for 2 weeks, even though oil kept moving higher. If you got stopped out at $1.15, it was a 3-cent stop loss, and then it slowly bled over the last few days. And you recall I actually mentioned in the chat room that we jumped out of this one, and our buy trigger on it would have been a break over $1.27. So if you're actually watching this on Thursday, it got that break over $1.27, and if you played it, you got 8 cents, which is not bad, but not that great, especially given the move that it had. These oil plays, usually when you play them on oil momentum, if the momentum doesn't hit within 1 or 2 days, I usually like to exit the play and set a trigger on a better buy on the chart, and that was the case with SSN. USAT. This was a trade alert on the 3rd of December. We got into this one at $1.03, and our target was $1.20. We ended up getting an 8-9% pop on this one and got as high as $1.12. Stops were 97 cents. Again, this is another trade that hasn't failed, but it ended up being dead money for the entire month of December. Now, this is one we'll definitely want to keep an eye on over the next 2 weeks just because of the setup here and how stable it has been. Probably be looking at buying a $1.13 break. That would be the 50-day moving average. So this is another one to stick on your watch list over the next couple of weeks. That break of 113, and we'd be looking for probably a 15 to 25% move. So we'd be looking for a move to 125 to 130. But again, this is another one of these stocks where I was saying if you were looking to free up cash to play other trades, you were in this one for, a week, 2 weeks, you'd start going, I've been sitting on this stock for 2 weeks. It's dead money. I'm going to sell it because it's pretty much where I bought the stock, and I'm going to set a buy trigger or a buy alert on my watch list that if it breaks $1.10 to $1.13, I'll jump back into the trade. And while I wait for the trade to actually become a better setup to jump into, I can use that cash for another trade. ESLR. This was a trading alert on December 6th. We jumped into this one, 80 cents, when our target was 1. This is when those solar stocks were really taking off. And actually, we timed this one really, really nicely, in my opinion. This, even though the trade ended up not working, it was still a very good setup. The next day, it ended up popping to 84 cents. And then we had after hours news, there was no way, sometimes news, there's just no way ever to time it. Stops were 75 cents on this one. What sucked is we ended up just giving back some of our gains that we had the previous day. Stopped out of this one, and as you can see, it was just pretty much a free fall. The news, recapitalization, anytime I see recapitalization in any sort of press release, I like to sell first, research later. It ended up working to our benefit here, and the lesson learned here was chart was great. We were nicely set up on this one. We just got bad news that no one would have known was coming. And, we just learned that, if we ever play this stock after it does its reverse splits again, we got to keep an eye on possibly not holding it overnight because of the tendency for it to issue crappy news after hours. Next up, we've got JOEZ, Jones Jeans. We jumped into this one December 15th. Buy consideration was 163 under. We were looking for $1.75. Stops at 155. Now, this is another one that, even though it didn't work, it wasn't that bad of a trade. It just ended up being dead money yet again. And even with stops triggered over the last few days, it really hasn't, sold off much. It was just really, really dead. It had a nice setup. We were looking for a January pop on this one, which actually still may occur because you can see here this week we had a double bottom on this stock. So this is another stock you would set a buy trigger on, that if it got above, the 20-day exponential, so 160, I would start watching it really, really closely, and a break through $1.65, I'd possibly be looking to buy it for a move, 10 to 15% move up to $1.80. So again, we were looking for, retailers are doing very well. We jumped into this laggard, really didn't do much. And again, this was another one, last 2 weeks really has done nothing, and it's the kind of trade not high on the radar that you could use to exit out of and use your money for another play. BCON. This was a trade alert on December 17th, 24 cent and under by consideration. Our targets were 27, 30, and 33 being the 200-day moving average. We actually got a nice little pop on this one. It hit our first target, and you recall I keep pounding into people's heads. Whenever a target gets hit, you always book half gains. I mean, it should be automatic. No email alert should be needed to tell you to book a gain when first target is hit. I don't care how small the gain is. Always book some on a spike. At 27 cents, even though this was a 24-cent stock, that's a 10% gain in a day. 10% a day, I'll take that till the cows come home. However, the next day we had some weakness on this one. So even if you didn't get out on that, we had a spike to 27. The next day it also hit 27. The next day, day 3, started going red. If you were sitting on this one and you saw this kind of candle action, typically on a stock, and especially on BCON, when you see a black candle after a run, usually you want to get a little bit of caution. And if you haven't booked some of your gains, you look to book it on that day. Now, Beacon, the reason this one sold off, being the piece of shit that BCON has been over the last couple of years, they, of course, announced dilution news and the stock sold off. Again, they've got a 6-month NASDAQ extension. Probably keep an eye on this for a day trade. Would not take this turd home overnight anymore just because it's burned us too many damn times. And this is one of those lessons. I actually even have it on the banned list, but I end up always coming back and playing the damn stock. It's on the banned list for reasons like this. They like to dilute. It's a dilution machine. Now, these last couple of plays we're going to look at have something very similar. DIET, ADAT. Now, Diet, this was a trading alert on Christmas week, December 20th. We jumped into it at 60 cents. We were looking for 73 and 85 cent targets as a January popper play. And you recall we had massive volume come into that stock that day. Traded like 10, 20. Actually, no, I think the average volume was like 30K. Traded almost 700,000 shares, and the stock went nowhere. Now, we've had this happen to us a few times in the past. A couple of recent ones, at least one that I remember, ABTL. If you recall, we had massive volume hit this one, and the stock did absolutely nothing. Now, this is one, where do we actually have our stops on this one? We had stops at 57 cents here, which actually after that really high day, it tried the next day to do the exact same thing on very high volume. Lesson learned here, 2 high volume days, no movement, sell the stock. I don't mind selling a stock and seeing it explode just because of the, what we've seen on it. And after you got triggered at your 57 cent stops, stock ended up dropping another, 20%. So ADAT was a recent example of this as well. Well, actually, ADAT was a chat room play, but I still wanted to bring it up just because it acted the exact same way that we had Diet act. We had huge volume hit this stock when we played it on Thursday, and it wouldn't go anywhere. I mean, it looked like it was going to break out at that 50 cents, and then all of a sudden, even though we had 500,000 shares in buy volume hitting, somehow the robots were pushing it down to 45 cents. Same sort of action we saw on Diet. Obvious fund seller / short working the stock, didn't move. As I mentioned in the tray or in the chat room, we sold out of it. We took our small loss. Doesn't mean we're not going to play that one again, especially this time of year. I'd want to keep a really close eye on it. I'd be looking for a break above the 20-day exponential now to possibly re-enter this trade in the near term, especially if this selling pressure is gone. But you got to remember, on a lot of these small cap stocks, especially ones that are down over the years. Whenever you see really, really high volume come in and the stock should break out, your warning signals should go up, because usually what happens there is you've got a fund that's looking to sell and they see volume coming in and they go, sweet, I'm going to dump into this volume so that I really don't kill the price. Without that volume, the fund seller with 1 million shares really has no one to sell to, so they got to wait for volume to come in. So DIET, ADAT, lesson learned from these two: when very high volume hits and we get absolutely no movement on a stock, time to get a little cautious, sell at least half. You can sell it all. If you don't feel comfortable in the trade, you move on to the next trade. That is how you survive this game over the years. Last but not least, we've got HSKA. It's got a D on it right here. As you remember, on Thursday, when did we actually trade this one? This was a trading alert, December 21st. By consideration, 42 to 43 cents. We were looking for 50 cents and 60 cents as our targets. January popper play. Last year doubled this time of the year. Stock really was looking pretty good. Then we had that news in after hours on Thursday, or actually right before the bell. One of the guys in the trading room found it. 10 for 1 reverse split. Personal rule of mine, just one I've developed over the years, was to sell it. This one actually ended up being a profitable trade if you didn't sell it. On Friday, it traded at $5.16, 10 to 1 reverse split. It ended up trading at 52 cents. So this actually was a winning trade, but this is just one of my personal rules. I don't play reverse split stocks. Now, if you're so inclined to play it, now that the float is much, much lower, the chart is really still set up here, and you could see it make a move up to that 200-day moving average at 583. So that's it for the review of the December trades. Hopefully you picked up something. Even if you don't, some of the guys, if you're new in the room and I call certain stocks, you hear the guys sort of chide me saying, hey, that's on the ban list. I have my personal ban list. If I play the same stock 3 or 4 times and it never works, I usually stop trading that damn stock. And those are the kind of rules, especially for you new guys, that you need to develop over the years. Some traders like myself don't like to trade airlines just because I've gotten burned in the past. Hopefully this little review on some of the plays that didn't work out like we thought, hopefully you find it useful. Always be learning is my number one motto when it comes to trading. Even I have not learned it all. I'm learning something every single day, and that's what helps you become a better trader. So that's it for the December review. Any questions, just send me an email on it, and I'll see you guys next month.